All right, now let's go to the accrued side of it. We're going to talk about accrued expenses here. Now, deferred is the things that cash has been affected, we just haven't recorded them yet because either we got prepaid or we prepaid ourselves. So the cash has already been affected, we just haven't recorded. Accrued is the other side of it. These are the things that we've been earning or we've been using, we just haven't paid for them yet. Cash has not been affected yet, it'll be affected later on. And these are, again, the things that we can push back until December 31st. So accrued expenses are the ones that's dealing specifically with expenses. These are the costs that are incurred in a period that are both unpaid, I haven't paid them yet, and they're also unrecorded, I haven't recorded them yet. That's why we're waiting until December 31st to do this. An example of this one. This one's not dependent on what's happened already. Remember I told you the deferred expenses and deferred revenues, we said these are things that we've already done in the middle of the year. You're not going to see these already affected in the previous examples. These are new adjustments that we're going to look at. So this one says December 31st, Bravo Company accrued $6,000 of salary expense that will be paid at the beginning of the year. Now, I guess the way to look at this one is maybe this company pays their employees on the last day of the month, but maybe December 31st falls on a Saturday and the banks aren't open yet. So they're actually going to have to pay their employees the following Monday, which would be January 2nd. Well, that's a different year, and we have to only be able to recognize things just in this year. Remember, we start January 1st in December 31st. We have to record it at this time. So we've used our employee services. We're just not paying them yet. So we've got to put them into an expense account, but we're going to hold back on the cash right now. So let's look at how we would do this. December 31st, I owe my employees money, but I've also used their services. So first and foremost, I'm going to put as a debit, because we're dealing with expenses here, I'm going to put December 31st, salaries expense. I've used their services. I'm going to go ahead and expense it. I'm going to put it at $6,000. And normally I would probably put cash as the credit. But again, this is an adjustment. This is things that I'm not paying them cash right now. I'm going to pay them at a later date because it happens next year. Okay, so I've got to figure out a way to say I still owe them that money. And what are we expected to do with this money? Well, we're expected to pay it to our employees later on. So this is going to be a payable account. But it's not going to be an accounts payable. This is a payable specifically to salaries. So we're going to call it salaries payable. And that's going to be our crediting account for $6,000. And then when we actually do pay it, we'll take it out of salaries payable and then also take it out of cash. But for right now, this is what we're dealing with because this is the period in which we're in. That's how we do an accrued expense. Appreciate it.